Peter. Thank you very much.
My pleasure.
Those are nice socks.
Thank
Can
you.
see those?
I like my colours I like to be colourful with my socks.
Very good. So, modern way of note cards. I want to ask you some questions. Took some notes during your speech. The industry has certainly seen phenomenal growth over the last couple of years.
Yep.
And I think part of the reason for that growth is the trust that has been built between the online marketplace lenders themselves and the people, the investors who back them.
Yep.
What do online marketplace lenders have to do to sustain that trust?
Well, that is a great question in the light of what happened last week. I think there was a lot of trust there in the industry, and I think particularly with Lending Club, that trust has, I wouldn't say it's disappeared completely, but it has been tarnished dramatically. Oh. And so I think, for Lending Club specifically, the biggest thing they need to do, I think, is increase the level of transparency. For example, Lending Club in the first quarter did $2.75 billion in loans, but they only make available to the public $2.1 billion of that. So because $650 million is outside of their main credit policy, it's for special programs they run for certain investors. But I think what I would like to see is them release all their data, become overly transparent. Now, they're probably not going to want to do that because it does invite competitors to come along, but I think for them, the transparency is the thing that they have to do. It goes for the whole industry, I think. The industry, it operates online. While you can go and visit the offices, everything is just stored in server farms somewhere. So you really need to have a level of trust that will come from more transparency. I think that is absolutely critical. The other thing I'd like to say is I think there should also be more third-party vendors involved. We need to have independent audits and independent verification of the loans. If you're a large investor, you want to make sure that the loans you're buying are exactly what you think they are. And that's where a third party can come in and make that verification for them.
Very good, Peter. Thank you. I think those are all words that we like to hear. So, as we look towards the future a little bit, what do you see as the main drivers of sustained growth? Will this phenomenon continue to grow the way it is? And if so, how can it sustain that growth?
Yeah, so I think this year is probably going to be a little different given the news of last week. I think we're going to see potentially even a decline. I think the growth will continue, mainly because I think the demographics are behind it. As you talked about the millennials, I talked about the millennials. It's they're a driving force for change, and I think that tailwind is going to overcome a lot. So I think eventually this year may end up being a flat year, might even be a slightly down year for some companies, but eventually that will come back because the people want credit. That's the bottom line. Small businesses are still struggling for credit. There's, the small business sector is interesting because everyone wants small businesses to have more access to credit. Politicians want it. Everybody wants it. And there's this sort of pent-up demand that small businesses are only just now becoming aware of their options and the fact that you can go to Cabbage right now, you can get an instant decision on a loan, you can have your money tomorrow, and there's plenty of other platforms that have a similar offering like that. That's something that's very compelling for small businesses, and I think that is the reason this industry is going to continue to grow, because these companies are looking at what their customers want, looking at all of sort of the reasons that people don't take out a loan. Small business owners. I've been a small business owner my whole life, my whole career, and there were plenty of times where I would have liked to have taken out a loan. I just didn't have the time to devote to filling out what I'm going to need to fill out. What I like about the online platforms is you can fill out a little bit of information. They do all the work. They're connecting all these different APIs. Sometimes dozens of different data vendors they will connect, and they'll bring everything together to make a very quick decision. And you can do 5-10 minutes of work and you're done. And that is something that I think is another driving force that will really help sustain the growth of the industry.
Very good, Peter. Let me ask one last question, if that's okay. So we're currently in a very solid economy. I think it's robust, and we are all enjoying the fruits of that. But as you think forward, at some point there will be an economic downturn. Mm-hmm. And in an economic downturn, even online marketplace lenders will have to build a foundation to live through that economic downturn. What would be the elements of a foundation to sustain an economic downturn for online marketplace lenders? What steps do they have to take?
So I think your question is interesting because it sort of supposes that there isn't a base right now, and or presumes there isn't a base right now. And I would actually question that, because I think, in fact, it was one of our keynote speakers at one of the lender conferences said, it was like 18 months ago, that an economic downturn will be the making of this industry.
Okay.
Because there is this huge question mark that everyone has, that, oh my goodness, these people haven't been through a downturn. It's all going to come crashing down if we have another 2008, it's all going to come crashing down. And I think, so to your point, the large platforms, I think, already have all the things in place that they need to really sustain a downturn. They have, if you look at if you go on LinkedIn and look at who is the chief credit officers for all these companies, they all come from the traditional lending. Yep. They all come from banking. There's, basically all of the big banks they've poached people from all these big banks. So these are people that have lived through multiple downturns that are creating the credit policies at these companies. So to think that they need additions now, I think there's room for improvement for sure. I think there could be more done on the stress testing area. I think particularly making it publicly available. Lending Club had a great presentation at Lend It, going through some of the data they had from an independent stress test, basically saying what would happen with another 2008, 2009 type environment. I think more companies need to do that. Some of these platforms are still pretty small. They don't really have the resources to do it. So I think if we have when we have another downturn, not if, obviously when we have that, I think the companies that haven't really put the time and effort into building that solid credit infrastructure, I talked about that's the most important part of the industry now, is credit. People now realize it, and I think we're going to see a renewed focus. And the bottom line is, it's all fine to, we've been in a benign credit environment now for many, many years. Most of these platforms have grown up in this benign credit environment, and I'm personally going to be fascinated to see when the cycle turns, if unemployment ticks back up to 7.5%, 8%, then you're going to see which of the platforms that are really doing a good job and which are not. I think people in this room are going to be pleasantly surprised that these companies actually will perform reasonably well during a downturn. That's my expectation.
All right. Peter, it's always a pleasure reading your thought leadership and you speaking at the conferences like this. I always learn something. So thank you very much for being here.
My pleasure.
Peter
Thanks,
Renton,
Alex.
ladies and gentlemen.
Thanks for joining us.
Thank you.